best in radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And welcome. You're listening to the Financial Survival Network. It is November 10th, 2014, and we're talking with John Rubino for our Monday weekly get-together. And if you were watching the precious metals markets just last Friday, well, you saw something rather shocking. You saw gold go up $37 for the day. And after the beating it took all week, it was really rather surprising, to say the least. And hey, John, welcome back. And how are you today?
Hey, Kerry. I'm all right. How are you?
All right. So that kind of came out of the blue, didn't it? That run up in gold.
It did. And I think what it means is that precious metals are finally getting their version of the Greenspan put. And that the Greenspan put is the public policy sense in the markets of the last 15 or so years that if the big banks or the financial markets in general get into any kind of trouble, they can count on the government to come in with massive amounts of newly printed currency and lower interest rates and whatever else the government can do to bail out the financial markets from whatever mistakes they made in the past. And so that's a signal just to keep on buying and to keep on speculating. And that's what we've seen for the last decade and a half, where the big banks feel free to ramp up their derivatives books and speculate in stocks and basically do things that could destroy them, but won't destroy them this time around because they know the government's going to bail them out. Well, something similar happened in precious metals last week, where they just got whacked. They really fell hard and have been falling hard over the last few months. But suddenly, demand for physical gold and silver has really ramped up. China is back to taking by itself more than the world's gold mines are producing right now in gold. And in silver, individual buyers of silver coins have just gone wild in the last week. You know, the U.S. Mint normally in a good month sells about 5 million 1-ounce silver eagle coins. And last week, in the space of 2 hours, they sold 2 million of them and were completely taken out of their inventory. They had to stop sales until further notice. And what that appears to mean is that the buyers of physical precious metals have decided that at these prices, they'll take all that there is. You know, at $15, individuals will buy basically all the silver that is available from their local coin store or from the online coin dealers or whatever. And at 1,100 and change, the big Asian buyers of gold will take all that's available also. And in theory, that puts a floor under the price of precious metals, because you got these guys out here who will basically buy it all. And now what we need to watch next is the premiums on physical gold and silver. If they start going up while the price stays low, then what that means is that the real price is rising and that physical is becoming the determinant of the market. In other words, so far over the last few years, the guys playing games in the futures markets have determined the price of gold and silver, but let physical demand rise to the point where it soaks up all the available inventory of all the dealers out there, and then just keep on going up. And then that means physical is now setting the prices in these markets. And that'll be a huge change when it happens, because the physical buyers will continue to buy at higher prices. And because there's no more inventory left. If they want to get it, they have to pay up, and they clearly want to get it. So that will remove the power from the guys playing games in the futures markets and shift it to people buying real money. And in that case, precious metals will stop going down and start going up. So that'll be a sea change in this market. And Friday is what it's going to feel like when it becomes the norm. The precious metals are going back down again today, but we'll see how the physical buyers react to that. And if they react the same way they did last week by buying basically everything that's available, then we know things have changed. So we'll know, over the next few weeks whether that's the case. And I suspect that it might be. And if it's not, that time is coming imminently. So 2015 should end up being very different from 2014 in that regard.
Hey, and don't forget, another big thing that happened Friday was that silver trading halted, right? For 10 minutes on the COMEX. Something happened, don't know what, but, all of these increases in gold and silver happened on a day when the employment numbers came out and, the so-called employment numbers. And, it wasn't a bad day for these made-up numbers if you follow such things and put any confidence in them. But, hey, the numbers came out, and normally gold and silver get slammed, and they went up substantially that day. Got to make you wonder what's happening there. And, I'm not the one to be predicting precious metals prices. Haven't been right so far, but perhaps we're getting to the bottom. And I do know when these markets turn around, they spike really hard and fast. That much I do know, right?
Yeah, these are incredibly thin markets. And once a turn takes place, then it doesn't take much capital flowing into gold and especially into silver to cause them to go parabolic. So that's out there. At some point, the absolutely unprecedented amounts of new fiat currency that's being just created and shoveled into the markets will have that kind of an effect. Some of it will start flowing again into precious metals, and these very thin markets will respond in a way that makes it worth the wait for goldbugs, at least. I think sometime in the next couple of years we'll feel very smart again for owning some precious metals, and we can't know when that's going to be, but the forces under the surface are building up. All the physicals being taken off the market by buyers right now, and presumably if prices go down much from here, then physical buying will ramp up and become even more extreme, and premiums will start to really increase. And that process is a self-reinforcing cycle where some good early moves get people excited, and the people who've been holding off figure that they'd better hurry up and buy because the price might run away from them, and then they jump in, and that pulls the momentum guys in, and then it becomes front page news. That's the kind of thing that's happening for gold and silver out there at some point. And I think there's a good chance it happens in 2015. So we basically just need to hang on until then, and let the physical market swamp the paper market as it's eventually going to do.
Hey, and don't forget, November 30th is a key date right after Thanksgiving. And I'm not talking about Thanksgiving holiday, the holiday season. I'm talking about the Swiss referendum coming up on gold, on backing the Swiss franc with gold and the peg to the euro. I mean, if that thing happens to get voted on, which the younger people seem to be leaning towards, this thing could be huge. And I'm not taking bets one way or the other. I'm just surprised that, here we have in New Jersey, we have a senator who runs on the gold standard, and that's basically his entire campaign. This guy, Jeff Bell, getting the government out of monetary policy. He gets 42%, John. And granted, New Jersey, blue state, he loses big, but nonetheless, he gets 42% of the vote. And you could argue partisanship, just having an R next to his name, he gets guaranteed percentage of the vote, but there was an appeal to it. And then across the pond in Europe, old Europe, Swiss referendum coming up. I think the two events are connected, and I think it's just the beginning of a universal cry on the part of the entire population of the world demanding sound money. I think this is an emerging trend, and sound money doesn't just mean backing your currency with a commodity. It means ending debt of governments, unlimited debt, the ability of governments to just borrow and borrow and borrow and borrow. And it means ending the money bubble is really the key. It's not so much just backing your currency with a commodity, which makes it harder to do that. But hey, more on this up next when we return with John Rubino of dollarcollapse.com on the Financial Survival Network.
FSN Radio. It's all about what's next.
Every week the show is growing. Would you like to be a part of it? Then go to clubfsn.com and help support us with $1, $2, $5, or $10 a month and get a host of premium content with newsletters dropped into your mailbox, free books, private audio clips, webinars, and much more. Then join clubfsn.com. If you want to get ahead of the trend and ensure your family's financial security before it's too late, go to clubfsn.com and sign up.
The Financial Survival Network. It's all about what's next.
If you're just tuning in, we're talking with John Rubino of dollarcollapse.com, co-author of The Money Bubble, and we're talking about what's going on with precious metals. Do the markets know something that you and I don't, John? You know, this referendum is coming up, and it's going to be held much to the chagrin of the powers that be, both on this side of the Atlantic and on the other side of the Atlantic. What's your take on this, John?
Well, I would be surprised if it actually passes and is enacted, because there are so many institutional forces aligned against it. But it's good that it's being put on the table. It's good that it's being debated. And that can't help but be a positive for precious metals going forward, that a lot of people in Switzerland, even if not a majority, are paying attention to this subject and beginning to understand that for the Swiss to peg their currency to the euro is basically to accept European levels of inflation going forward. And that's something that historically the Swiss have never been willing to accept. You know, the Swiss franc has been traditionally a strong currency because it's been managed well. You know, the Swiss get banking, they get monetary stability. And the fact that they've changed their policy in the last few years is a sign that the guys in charge are going to put expedience over long-term stability for their currency. And so people are kind of rebelling against that. And they might not win, but the rebellion is making a point. And so that can't help but be good for precious metals, because anytime gold and silver and sound money are a topic of debate, it wakes people up and makes them more interested in owning real money. And so, yeah, it's a good thing as far as it goes. However, I think that when it fails, if it fails, it's liable to be presented in the mainstream media as a defeat for, you know, the atavistic forces of old style money, and a victory for modern money. And you know, it's going to be presented that way by the Keynesian dominated mainstream press. And, you know, we'll know it's not that, but yeah, that's probably how it's going to be seen. And I don't know, you know, I think it's a good thing, but it's not something we should get really excited about unless there's an upset, unless it passes, and then things get really interesting. So go Swiss. You know, I hope you guys vote in favor of at least, because it's actually 3 referendums that are on the ballot rather than one that control different parts of this issue. But, you know, if even one of them passes, I think it's a very good thing, very big for gold and silver.
Mm-hmm. Yeah, well, you know, I wouldn't be surprised. Don't be surprised if there's an upset here, John. These younger Swiss, they're getting back to the basics. They see that the current system is failing, and these referendums are often an attempt by the people to take back power from the establishment, from the elite. And, just like, look, let's go back to this election. I don't want to get into Democrat versus Republican. Forget that, because, that's just a meaningless exercise. Put on happy faces, whatever. Although I do think this election was different than the usual Republican versus Democrat paradigm for a number of reasons. But let's go to these marijuana initiatives, okay? Oregon, passed. Alaska, passed. Couldn't find two states more different. One is bright blue, the other is bright red. And yet they both passed legalizing recreational sale and use of the dreaded herb. Washington, D.C., okay? They didn't legalize the sale per se. They legalized possession and use. And you're allowed to give your friend an ounce, not sell, but give up to an ounce, and a legalized possession of up to 2 ounces. Okay, so this is repudiation of the correctional industrial, complex, right? The legal industrial, correctional industrial complex. Because you start legalizing these drugs, all of a sudden the private penal industry is going to go bust, John. I mean, it really is taking back power from the legislature, from the professional ruling class.
Yeah, legalizing marijuana from a libertarian standpoint is probably the most hopeful trend in the world right now.
Yeah,
and yeah, there are all kinds of economic benefits. There are certainly moral benefits to allowing people to make decisions themselves about what they want to put into their bodies and how they want to behave, as long as they're not hurting other people, et cetera, et cetera. From a libertarian standpoint, this is a great thing.
Yeah.
And, as you implied, the other thing that these referendums do is they create a political base for actual political parties to run on, and politicians. And maybe that's the case in Switzerland. Even if the referendum that's on the ballot in late November doesn't pass, it creates a political base that somebody can run on. So maybe we'll see a version of Ron Paul choose that as a major platform in a future campaign. So it lays the groundwork for the accomplishment of that goal, bringing gold back to Switzerland and linking the currency to gold, and breaking the link between the Swiss franc and the euro, et cetera, et cetera. These are things that would be great for Switzerland and should happen. And now a politician can grab the mantle of this policy and run on it. If it gets, say, 45% of the vote, it might lose close. And if it loses close, then you've got a platform to run on. And that might be the real value of this particular referendum, that it creates a path for somebody to gain real power in Switzerland and actually make good changes.
Yeah. And because that eventually we're going to go back to having gold involved in the international monetary system. It's just a question of when, because we always do. They try this over and over again throughout history. It's littered with these experiments. The only reason why this experiment's lasted as long as it has, John, is because of computers and technology and military force and, other factors, internationalization, globalization, some other trends that have taken place. But otherwise, it would have failed long ago. And eventually we'll be back with gold. And, there's just no way to avoid it. That's my opinion. And I think you agree. And that's why Jeff Bell only politician in the country that ran on the gold standard. So, I mean, he's in favor of a government-enforced gold standard. I kind of don't like it because the government always winds up cheating and lying about how much gold they have and how much money is actually backed by the gold standard. But you got to start someplace, you know?
Yeah. And we obviously have to go back to some form of sound money because fiat currencies have just let the world's governments run wild. And we could spend 3 or 4 hours starting right now just talking about all the crazy stuff that's happened in the last 20 or 30 years involving bureaucrats and politicians with unlimited credit cards because they have printing presses. And so, we are headed for some kind of a disaster. It might be military, it might be financial, it might be some combination, but the system can't go on as it is. And so we have to have some kind of a monetary reset at some point. Maybe it's driven by some kind of huge crisis, or maybe it's driven by political calculation on the part of the guys in charge who realize that the troubles that will come if current policies continue will affect them as well. And maybe they'll, voluntarily go back to some kind of sound money. We don't know. There's no way to know how it happens because there are too many moving parts to this story. But one way or another, 10 years from now, the world will have some form of sound money. It will probably be based on gold and possibly with silver in the mix. Although the whole cryptocurrency thing is an interesting wild card here. We don't know what role Bitcoin will play in all of this, so you can't really know the details. But you can know that what we're doing now doesn't work.
Oh yeah,
and so if something can't go on, it has to stop.
Absolutely, and I want to go back to something that Milton Friedman came up with many years ago, which was that his concept of, after going off the gold standard, was that they would only increase the supply of dollars by, say, 2% a year, in keeping with the increase in the population, and that would keep the value of the dollar stable. And, if we had, and that really is the concept of Bitcoin, it's not going to go up in volume, and therefore the supply of it will remain stable, and therefore you have effectively the volume theory of money, that because the quantity theory of money, that because the quantity stays stable, the value will stay stable, and effectively it'll go up because productivity will go up, and business will flourish because people will know that the value of the currency will remain stable into the future. They'll feel more secure making longer term deals, all that. And that is the beauty of Bitcoin, but we can discuss that another time. Got to go now. DollarCollapse.com. Sign up for John's newsletter, and FinancialSurvivalNetwork.com. Sign up for our newsletter. Got a webinar coming up on November 25th at 9 p.m. Eastern Standard Time with Craig Henke of Turd Ferguson, TFMetalsReport.com. If you want to be there, link will be found on the site shortly. And John, we will talk to you next week.
Great. Thanks, Kerry.
FSN Radio. It's all about what's next. Go to FinancialSurvivalNetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.